We're going to review the freeandclear.com required income calculator, which is a mortgage calculator that allows you to determine how much money you need to make to qualify for a given loan amount. To find the required income calculator on freeandclear.com, simply click on the Mortgage Calculators tab on the top left corner of any page. That'll take you to a page that lists all the calculators available on freeandclear.com, and the required income calculator is listed under Home Purchase Mortgage Calculators. If you click on the triangle to the right of the calculator title, it reveals a brief description of the calculator. I'm going to go ahead and click through on the link, which is going to take us to the calculator. As you can see from the way the page is laid out, the inputs for the calculator are on the left-hand side of the page, and the outputs for the calculator are on the right-hand side of the page. The inputs are the information that you provide or select, and the outputs are provided by the calculator after you click the calculate button. I'm going to walk through the inputs one by one. It's important to highlight that if you ever have a question about an input, simply hover your cursor over the icon to the left of any input rectangle, and it shows a brief description of the input and the required information. The first input is mortgage amount, which is the size of loan you're seeking. In this case, I'm going to say $300,000. We're looking to qualify for a $300,000 mortgage. The second input is interest rate. If you hover your cursor over the icon, it shows you the current interest rate for a 30-year fixed rate mortgage. In this example, the current interest rate for a 30-year fixed rate mortgage is approximately 4.25%. If you click on the drop-down menu, you can select the interest rate, and I'm going to go down to 4.25% and use that in this example, but we provide a wide range of interest rates that you can select. The next input is mortgage term. This is how long of a mortgage you're obtaining. And again, if you review the drop-down menu, we show a range of options from 10 years all the way up to 50 years. I'm going to select 30 years because that's the most common mortgage term. The next input is down payment, which is how much of your money are you contributing to the purchase price of the property. Typically, when you're buying a home, you put 20% down, although it's certainly possible to buy a house with less than 20% down and with more than 20% down. But I'm going to select a 20% down payment in this example. The next input is total monthly debt. This is any recurring monthly debt, such as an auto loan, credit card bill, student loan, any revolving debt that you pay on a monthly basis. I'm going to use $525 in this example. The final input asks, does the property require a monthly homeowners association fee? Sometimes, if you buy a condominium or a property in a multi-unit development, there's a monthly fee for the maintenance and upkeep of the development. In this case, I'm going to say yes, there is a homeowners association fee, and let's say that fee is $250 per month. We've provided all of our inputs, click the calculate button, and now we have our outputs. The first output is the estimated monthly gross income required to qualify for our specified mortgage amount, which is $300,000 in this example. It's important to highlight that this is a gross income figure, not net income. So this is your income before any deductions from taxes, Social Security, or Medicare. The next output is the estimated monthly mortgage payment. This is the mortgage payment based upon the mortgage amount, interest rate, and term that you've provided. The next output is the monthly homeowners association fee, which you've provided as the final input. The next output is the estimated monthly property tax and homeowners insurance expense. It's important to note that property tax and homeowners insurance expense is an estimated value. These figures vary by county and state, so check with your local service provider to understand what these figures would be in your area. The final output is estimated total monthly housing expense. Estimated total monthly housing expense is the all-in cost of buying a property. So it includes your mortgage payment, homeowners association fee in this example, and your property tax and homeowners insurance. So those three figures add up to total monthly housing expense. One cool thing about the calculator is that you can change an input without having to refresh the page. So let's say we're looking at a $400,000 mortgage with an interest rate of 4% and a mortgage term of 25 years. And there's no homeowners association fee in this example. Simply click the calculate button and the outputs are refreshed automatically. So you can run any number of scenarios without needing to refresh the page. After you've reviewed the scenarios, you can click on the compare lenders button to review a list of lenders and interest rates in your area. If you ever have any questions about the required income calculator or any mortgage topic, you can click on the Ask an Expert button on the top of any page on freeandclear.com and submit a question. The feature is free to use and we never spam. Thank you for reviewing the freeandclear.com required income calculator.